I've been an owner of 3 investment rental properties for 8 years now. But today, I'm going to show you how you could start investing in real estate with just $100 without dealing with tenants, repairs, or even getting a mortgage. Most people think that real estate investing means saving up tens of thousands of dollars for a down payment, dealing with headaches from managing the property, and stressing about interest rates. But what if there was a simpler way? A way to own real estate, get paid rental income, and build wealth without ever stepping foot in a property. This is where REITs come in. Real Estate Investment Trust, or REITs, lets you invest in real estate just like buying stocks. You can own shares of real estate like owning an apartment, shopping complex, office buildings, or even AI data centers. But here's the big question that I want to discuss in today's video. Is buying REITs actually better than owning property yourself? Which option makes the most sense and makes the most money? Investing in REITs may have its advantages, but what's the catch? We're going to break it down, everything you need to know about REITs versus owning real estate, including number 1, the pros and cons of real estate investing strategies. Number 2, my personal experience with managing rental properties, including what gives me my headaches. Number 3, how interest rates, housing prices, and the economy impacts your decision. Number 4, and the best REITs to invest in right now, including ones that are riding the AI boom. Stick around till the end because I'll also share my personal real estate investing strategy and how I'll approach the market in 2025. If you're new to my channel, I'm Eric Pan, a full-time investor and creator where I break down stocks, crypto, and wealth building strategies to make investing simple. If you're ready to learn how to invest in real estate the smart way, hit that like button and let's break down the first key concept: why investors prefer REITs over directly owning real estate. So, why do investors choose REITs over buying property? A real estate investment trust, or REIT, is basically a company that operates and finances income-producing real estate. It's like a giant real estate portfolio that you could buy a piece of, just like buying a share of a company. So here's how it works. You invest in a REIT by buying shares through your brokerage, just like how you would buy any other stock. The REIT collects rent from its properties that they own and pays out the rent that they collect to its shareholders. They are legally required to pay back at least 90% of rental income back to the investors in form of dividends. So in simple terms, REITs lets you own real estate, earn passive income without needing to buy, manage, and maintain the properties yourself. So what are the advantages of buying a REIT? For a lot of investors, REITs solve 3 of the biggest problems that comes with owning real estate: liquidity, management, and diversification. So let's go over them. Number 1, liquidity. Buying and selling real estate takes weeks or even months, and there's all kinds of fees, closing costs, realtor fees, and all types of paperwork. With a REIT, you could buy or sell instantly from your brokerage, just like any other stock. Number 2, no tenant or property management hassles. No dealing with evictions, repairs, or bad tenants. I've personally had to deal with HOA billing errors, broken appliances, and I kid you not, someone breaking into one of my properties. These are all the headaches that you'll never have to worry about for REITs. Number 3, diversification and expert management. When you own 1 or 2 rental properties, all of your money is being tied up in those locations. With REITs, you're investing into a portfolio of companies across different cities and neighborhoods managed by professionals who specialize in real estate. But as good as REITs sound, they're not perfect. They are definitely not always better than buying real estate outright. Let's be real. There are some downsides that you should know of. If you're thinking about buying REITs, let's go over them. Number 1, tax disadvantages. The dividends paid from REITs are classified as non-qualified dividends, meaning that they get taxed at your ordinary income. Regular dividends from all other stocks are considered qualified dividends, which get preferred tax treatments. This means that you pay higher taxes on your REIT income compared to income from, let's say, Apple or Microsoft. However, on the flip side, if you were to own and manage a property outright, you would have tons of other costs, including repairs, maintenances, property management fees, and so much more. So depending on how you weigh your pros and cons, maybe incurring a tax on dividends you make on REITs isn't so bad after all. Here's a pro tip for you. Owning REITs inside your Roth IRA negates all the higher taxes because everything you own inside your Roth IRA is completely tax-free. So if you're considering on owning REITs, it might be wise to do so inside your Roth IRA. Number 2, less control. When you own rental properties, you could raise the rent, you could remodel, and you could add value in different ways. You could essentially even force the property to appreciate. But With REITs, you are simply just a shareholder. You have no control on how the properties are going to be managed, and you have essentially no influence. This may be more of a significant reason on why investors still prefer to own and manage rental properties to generate additional income, especially if they are financially capable of owning rental properties, adding value, doing remodeling, and whatever that might be. Number 3, market volatility. Sometimes REITs can be volatile. REITs are extremely liquid, which also means that the price of the REITs can fluctuate quite frequently. Unlike traditional real estate, it's unlikely that the value of the property will really fluctuate all that much. REIT prices move up and down, just like any other stocks. If the broader market is bearish, the market price of the REITs can also drop along with all the other major indices, even if the property is still making money. Your total equity would depreciate, but this may be what investors love about REITs. You get to buy more shares at a discounted price, meaning that you can lower your average cost of investment in real estate. This is not possible with buying real estate outright. I hope that these pros and cons can help you develop a better understanding of REITs, and you can also make more informed investing decisions, such as when you buy REITs and when you might want to own real estate directly instead. The reality of owning real estate. So, now that we've broken down what REITs are, let's talk about the other side. Owning real estate outright. A lot of people think that buying real estate is the ultimate goal. It's the guaranteed way to build wealth. In fact, according to a 2024 Gallup poll, most Americans perceived real estate being the best long-term investment. But the reality is, it's a lot more complicated than that. Look, I own multiple properties, and while I do believe that real estate is a great long-term investment, I want to share some of the hard truths that most people don't tell you. I am by no means trying to discourage you from working towards buying your first home, but I would like to share my personal experience with you guys who aspire to be landlords. Let's start talking about the advantages of owning real estate, some of which what REITs cannot provide. Number 1, absolute full control of your investment. With rental properties, you can call all the shots. You could set the rent prices, you could make renovations, you can increase the property value, everything. Number 2, tax benefits. The beauty of real estate is that there's a world of tax deductions that you could write off to offset your income. Here are some of the things that you could write off: depreciation, property taxes, mortgage interest, insurance, HOA fees, repairs, maintenances, and so much more. And it's pretty common to offset a lot of your income with these deductions. With REITs, none of this is available to you. Number 3, leverage. With REITs, you're buying shares with just simply cash, but with real estate outright, you're leveraging debt. If you buy a $500,000 house with a 20% down payment, you're controlling a $500,000 asset with just $100,000. As a property appreciates, you gain equity on the full value, not just your down payment, and that is the power of leverage. And this concept may sound a little bit complicated to you. However, let me know if you're interested in a more detailed guide on real estate investing, and I'll explain the power of leverage and share how I take advantages of debt to build wealth. You can comment the word real estate to let me know. Number 4, stable, predictable cash flow. As mentioned earlier, unlike REITs, which can be volatile like stocks at times, rental income is locked in throughout the lease. This makes rental properties a reliable source of income, assuming you have good tenants. Number 5, wealth accumulation over time. If you hold on to your real estate long enough, statistically, your property value will appreciate due to scarcity. Historically, real estate prices have appreciated over time, especially in desirable areas. But before you go all in on buying real estate, let me tell you, owning real estate isn't as easy as social media makes it seem to be. What most people don't tell you is that owning rental properties isn't a form of true passive income. It won't be passive all the time, especially if you're managing the business yourself. In fact, it could be a full-time job if you don't have a solid system in place. Number 1, tenant issues and evictions. Not every tenant pays on time. I've dealt with late payments, tenants who have ghosted me after a couple months, and even situations where eviction courts takes months to process. In some states, landlords have to wait over a year before they can legally evict a tenant who isn't paying their rent, which to me still doesn't really make sense. Late payments could potentially affect your personal cash flows, and even worse, late payments can turn into no payments, and then you're left with 2 choices. You either go to court or swallow the costs. I've done both. Number 2, unexpected repair costs. costs. True story, I had a roof issue that led to a $10,000 repair bill recently. These kinds of expenses can eat into your profits really quickly. And if you're thinking of living off of your rental income, I recommend preparing an emergency fund or some sort of savings in case the unexpected cost happens. Number 3, property values do go down. Yes, real estate prices do appreciate over time, but not every market goes up every single year. If you bought at the very peak of the housing cycle, you might have to wait a couple of years before you see any significant appreciation. This means that you have to continue to finance a property, manage it with time and money until it's a good time to sell. Number 4, hidden costs of property ownership. When calculating potential returns, most people grossly underestimate expenses. Here's a list of expenses that will cut into your rental income. Property taxes, HOA fees, insurance, property management fees, if you decide not to manage it yourself, and vacancies, months where you have no tenants but you still need to pay the mortgage. Also, don't forget about interest rates. Higher interest rates makes it extremely hard to profit. Buying rental properties right now is way more expensive than it was a few years ago because mortgage rates have skyrocketed, making positive cash flows harder to achieve for landlords. So, should you buy rental properties or invest in REITs? Now that we've covered both sides, which is actually better? Please share your thoughts with me. My answer is it depends. It depends on your financial situation, your investing goals, and how much effort that you're willing to put in. Let me give you a checklist to help you make a better decision for yourself. Here are 3 reasons why you should go with REITs. Number 1, you want a completely passive way to invest in real estate. No tenants, no maintenance, no headaches. Number 2, you like the flexibility of being able to buy or sell anytime instead of being stuck with the property for years. Number 3, if you're looking for consistent dividend income while getting exposure to real estate growth. So if you could relate to those 3 reasons, REITs might actually work better for you. In contrast, consider owning rental properties if, number 1, you want full control over your investment. You set the rent prices, you set the upgrades, and you manage the asset yourself. Number 2, you're okay with dealing with tenants or at least paying a property manager to handle them for you. Number 3, you want to use leverage, aka a mortgage, to maximize your returns. Like buying a $500,000 house with $100,000 down payment means you're controlling a much bigger asset than what you've originally put in. Number 4, you're prepared for the ups and downs. Real estate isn't easy and there's always unexpected costs like vacancies and market fluctuations. For me, I use a mix of both. I own rental properties for long-term wealth building, but I also invest in REITs for passive income and liquidity. It's the best of both worlds. My rental properties give me equity growth, while my REITs give my portfolio diversity and collects dividends without lifting a single finger. And if you're thinking about investing into REITs, there are some amazing opportunities right now, especially in the AI-powered infrastructure and data centers. So let's take a look at some of the best REITs to buy today. The best REITs to invest in right now. Not all REITs are created equal, and the best ones to invest in depends on the current market trends. Right now, there are 3 key areas that I am closely watching, and I'm looking to increase my exposure in real estate through these REITs. Number 1, VNQ. This is my top recommendation for beginners. If you want broad exposure to real estate, VNQ is the simplest choice. It's a diversified ETF that holds a mix of different real estate sectors, including apartments, office buildings, retail spaces, you name it. If you want a set it and forget it real estate investment, this is the one. Number 2, data center REITs, which is the AI boom play. With the rise of AI, data centers are in massive demand, which is why I like REITs like Digital Realty, Equinix, and American Tower. They own and operate infrastructure that powers AI, cloud computing, and internet services. These aren't your typical shopping malls or apartment REITs. They're real estate plays on the tech revolution. Number 3, REIT ETFs. IDGT is iShares US Digital Infrastructure and Real Estate ETF. It's an ETF of individual REITs companies like the previous ones that we've mentioned. It holds multiple REITs like Equinix, American Tower, and Digital Realty Trust. So if you don't want to bet on individual REITs and rather have a collection of different REITs focused on infrastructure, this is your best bet. All of these REITs can be bought directly through your brokerage, just like any other stock. You don't have to wait for real estate deals, negotiate prices, apply for loans, or anything like that. Just decide on how much you want to invest and start building your real estate portfolio today. You could refer to my personal list of brokerages in the description of this video to use my sign-up bonuses. Real estate investing doesn't have to be complicated or require huge amounts of capital. If you want full control, go down the rental property route. But if you're looking for an easy way to get real estate exposure and earn passive income, REITs are a powerful option. And obviously for younger individuals who are just starting out with just limited amounts of capital, REITs are a great way for you to get invested into real estate. My recommendation is to keep a watch list of REITs and set a price alert to try and buy the dips whenever possible. This way you could start slowly building up your investment, and when the timing is right, you could cash out for your first down payment. If you got any value from this video, make sure to drop a like and let me know in the comments, are you going to be investing into REITs or rental properties or both? I'd love to hear your personal stories too. And don't forget to join my free newsletter where I send out weekly investing ideas and portfolio updates and a bunch of other deals that you could also use as well. Link is in the description.